G'day there, welcome to the closing bell video on the 11th of September. Today I'm just going to have a quick look at nickel because I think it's breaking out to the upside. I have had a chat about nickel with you in the past, saying it was looking like it was ready to blast off. It is breaking out to new multi-year highs now, so I just wanted to show you a big picture view of nickel and why I think it could really get a bit of a wriggle on. Obviously, aluminium this week reacting to the coup in Guinea with bauxite supplies possibly under pressure going forward. We don't know really what's going to happen there. I think the coup leaders saying that they're not going to create dramas for the mining sector, but you never do know, do you? So AWC really rocketing higher. So I'll show you that chart as well. So let's kick off by having a look at nickel. I'll also show you a couple of nickel stocks that I reckon are worth keeping an eye on. Now, looking at nickel, I have been showing you this chart, but I'll just do a recap for people. We have the old low from 2009 there, which is a really important level when looking at the big picture, because we have the recovery in nickel and then the failure going into 2016. And this is what I like to see before a new bull market really gets going, is this it's a double bottom. And I see it as a false break of a major level, major multi-year level. So when you see that, those sort of moves, which really clear everyone out, and then things turn back up again, that can often be the beginning of another bull market. Now, it has been trading higher over the last few years, and it's been a really steady trend and a really nice example of the types of structures that I look for, where I'm looking at each wave to the upside in the trend and making calculations on those waves, looking for the area where I'd expect reversals to occur, which is those buy zones being the 75 to 87.5% retracement area. And you can see on the way up, it's been a pretty clear set of, and I'm just doing a guess on where that area is. I could do the actual calculation for you just to prove that it is, but you can get the picture there. That over and over, we had the wave to the upside, then the big retracement going into the buy zone, next wave to the upside, then the big retracement into that buy zone, up it goes again. And then we've had a third wave to the upside, and then another big retracement into that buy zone. And here we are sort of breaking out to the upside to new highs. And really, when you've looked at the way this thing has moved over the last few years, you'd be getting a bit nervous about now because prices have, busted out to new highs there in the past. And that really was the signal that you were getting close to the end of the move. And we're about to see a big clear out of positions again. But this is what often happens in these markets where things slowly turn around. They'll spend a lot of time doing what this has done, which is creating these big retracements, really keeping people nervous by not really rallying that far and constantly looking like it's getting going and then failing. But then once you've had two or three of those waves, often the next wave can be a really big one to the upside. And that's why I'm just keeping an eye on this now, saying, well, it's already been rejected from this high about 6 months ago. So you can see we've got a new high created there. And at the start of the year, we did test above there and we got hit in the market. You can see back to buying support, which is around where that 10-month exponential moving average is. And the buying support did come in there on that monthly trend, and it's consolidated for the past 6 months. And now here it is starting to break out above that high. It really is a perfect little setup for it to actually trend. Now, look, it may not happen. Yet again, we could see another little false break and a move back to buying support again before managing to move higher. But it is just a setup for me where we've had the big false break of multi-year low. We've had a long drawn out affair of the market rebalancing and turning back up. It's almost like a rounding bottom that you hear about. And I'd say that process is nearly over, and it's been 4 or 5 years of this. We could be getting to the point where we're going to see a really nice move to the upside. So a couple of stocks that you might want to keep an eye on. Panoramic Resources, PAN, they're getting a new mine up and running again. It's been it fell over, refinanced, all that sort of thing. And they've been doing some drilling and sort of opening up new areas of the mine. And it's really getting going again, and has recovered over the past year quite nicely. We've actually bought this in the pivot trader at 8.7 cents. So we actually got on this quite early and have been running it for the past year. But it's just been consolidating for the past period over this past sort of 6 months or so, and is just starting to break out to the upside, with nickel looking good. So if nickel prices really do take off to the upside, this is one stock that probably is going to benefit. Another one is BSX. This one has been trading up quite nicely. They have an operation that hasn't really got going yet, but they're doing a lot of drilling and proving it up. And they also want to do some downstream processing in time. So this one really looking pretty interesting, I think. And you can see the long-term trend on this monthly chart turned all the way back in early 2020. It was really shot off to the upside. And we've had a bit of consolidation for the past sort of year, really, in this stock, up around that sort of 30 to 40 cent region. You can see a few months ago, we got the buy pivot there, and a lot of support around that 20-month moving average. So this trend all still intact, and should be testing up around that 50, 55 cent region before long. But BSX is definitely one to watch. I'd probably be running away from it, below 30 cents in the short term. But really, I do like the story on this one, and think they've got a pretty good future, and the drilling that they've been doing recently has been pretty positive. So yeah, looking pretty interesting. Now, look, moving on to AWC, with the aluminium price really rocketing higher on the back of these troubles in Guinea. Now, look, that can be a double-edged sword, that sort of situation, because if the issue is resolved and understood that things aren't going to go pear-shaped in the bauxite market, then the heat could come out of aluminium, and quite rapidly. But when you look at this chart, it is just looking pretty interesting to me. If I just show you the development of AWC, this is from 2013. This is over 10 years of data. And again, you're just noticing the way that these trends develop, with waves and the large pullbacks in those waves. And we're looking at each of those waves and working out where are the areas where price action pulls back to. And I'm looking around that buy zone of the wave as a spot where I'm going to look for reversals. So if we just look at the way that this whole trend has developed, and we follow on that next little wave, you'll see there that we've got the buy zone coming in around this area, and you'll see prices turning back around. We've got the monthly buy pivot there, and prices then rocketed off to the upside. And if we again follow along, looking at this next wave to the upside, and we pull back, looking at where is the buy zone of that wave, where would I expect the buying pressure to come in? And you see there prices really plummeting into this buy zone area, but ultimately turning back up. We got the monthly buy pivot. Actually, if I'm really strict with it, we've got the lowest price in the move was actually all the way back here. This is a quirk of the programming, that it's very difficult to program it perfectly. But you'll see this is actually the lowest price candle, that one. So that means I need to see a monthly close above the high of that candle to create the monthly buy pivot. So it's actually could be this month that creates the monthly buy pivot in AWC, even though it looks quite tricky to see it. Also, the long-term trend shifting, that 10-month exponential turning up. We've seen the retest of the buy zone of the most recent wave to the upside from 2016 to 2018. So all of those things just adding up that on a pullback, down towards $2, $1.60 to $2, if it could do that, may be good buying on a long-term sort of play in AWC. Obviously, a large cap stock, a slow-moving stock. It's not one of those stocks that the punters who like the penny dreadfuls and want to make 100% in a few months. That's not going to happen in AWC. But just looking quite constructive for more upside in the long term in that AWC chart. Well, really, that's enough for today. Just wanted to show you a couple of quick charts. Nickel looking pretty constructive, I think, for more upside. It'll be interesting to see whether the rally really gets going above these highs. If that can happen, I think the rally could be sustained and probably surprise to the upside. Aluminium is a more of a difficult situation, being the issue with Guinea that could get sorted and the heat could come out of that market, but we shall see. So that's enough, I reckon, for the week. And if you're interested in finding out what I do and what my services are, just look at the links below the video, click on those and check out my services, Australian Small-Cap Investigator and Pivot Trader, where I go much deeper into the technical analysis on my stock trading with people. And otherwise, I shall come back with more next week. All right, cheers.